Welcome back. We're almost getting into pre-open but Anuj joins us in the studio. Well, Anuj, the last couple of days, you're getting a sense that maybe, in fact, there is some fatigue on the Nifty. Is that the way you're reading it, or do you think we're likely to move up from here as well?
Morning, guys. There's fatigue or maybe just ahead of the events. There's so many events lined up, starting with the GDP data today. Fed Chairman Powell has to speak. That is there. RBI policy next week. There's Gujarat election, which will be announced. The outcome of that will be announced next week. The yesterday market action was a bit disappointing, especially in the broader market, but that's how it is, right, at all-time highs. On margin, the global cues are slightly negative because if you've seen Brent, the US yield, dollar index, they're all on margin have gone up, though we have been ignoring global cues. The only thing is that, not too many are willing to preempt what Powell would say, because last time, the market celebrated too early, and then Powell came and almost put a lot of cold water on, on everyone's ambition. So I think that is where maybe the market wants to see what he has to say today and then take a big call. The base for the Nifty is 18,550, and I think the bigger support zone is 18,450. For me, the real story would be how market reacts tomorrow, around that 18,650, 700 mark if it goes there, because 18,700 call has maximum open interest of about 27 rupees. So if you cross 18,730, that could lead to next round of rally. This is a parabola move, and in parabola, it's always tough to sort of know when to enter or when to exit. When this ends, the correction would be sharp, but it's tough to time it. The Bank Nifty, of course, yesterday was impacted by Financial Nifty's expiry, but it still remains very strong index, not even testing its 5-day exponential moving average.
All right, Anuj, thanks very much for that. So, prices have to confirm, and that is not happening. The loss of momentum we've been talking about, that is there to see, but reversals have to be confirmed by price action, which is yet not the case. Let's put that to Manoj Muralidharan. He's Vice President Derivatives at Reddy Broking. Manoj, good to have you with us here. Thanks very much. How would you approach indices, and what would your trades be?
Good morning, Prashant. Prashant, this series started on a very optimistic note, both in the Nifty and Bank Nifty. More into the Bank Nifty, if you see, the positioning was almost a 14 lakhs more. But even on the Nifty side, the position has been good. Affairs have started this month with a good 77% long and versus a 59.60 that we saw last month. And we have been seeing long build-up. So the view here is it keeps on buying. There is a long build-up. It's a buy on dip market, and the dip qualifies as an 18,550 at least for the first December expiry. And like Anuj rightly said, there is good amount of call writing at 18,700 strike at that 27 to 30 rupees. So we believe the spot of 18,730. Now, the reason why I mentioned spot is obviously the futures are almost at 125 to 130 points premium. So that would be the resistance for this week. So we believe closer to 18,550, it becomes a buy. Stop loss of, let's say, 18,500 and a target of 18,730. For the Bank Nifty, we believe 43,800 would be quite a resistance, and closer to 42,800 would become a better buy. So that is where we can go long on the index for maybe a 700 to 800 points.
Okay, all right. What about individual stocks? Manoj, what do you have?
Nigel, I believe Reliance has staged a good comeback, and we saw that in the last couple of days. But the weighted average price of, again, a follow-up buying would be somewhere close to 2,700 to 2,705. So we recommend buying Reliance closer to that level. The stop loss should be 2,680, and this stock can go all the way to almost 2,770. Second is Tata Motors. Also, the last 5 days of expiry, we have seen good delivery-based buying, and we believe that December series can take to a newer level. Maybe a 448 is what is the positional target we have, but try to buy it closer to 425. The stop loss should be 416 on the stock.
Okay. All right, Manoj, wishing you a good trading session ahead. Thanks so much for joining in and giving us your view on the index, as well as a couple of trading strategies. But it's time for our special Momentumizer segment. And Mangalam joins us to tell us about a stock that's moved very, very well, AB Capital. Mangalam.
Well, Nigel, we have been seeing the mid-cap index underperform for the last couple of trading sessions, but can't say the same for AB Capital. In fact, yesterday itself, it was up around 5% This week, it's up 7%. If you just take a look at the stock this month, it is up 32%. And if you take a look at it from June 2022, where the stock hit its fresh 52-week low, we've seen a rally of almost 68%. And it coincides with June because also on June 1st, we had Ms. Vishakha Mulye appointed as CEO of the company. She, of course, joined from ICICI. So That was one of the inflection points. But importantly, if you just take a look at the Bombay Stock Exchange notifications, you'll see that the company has been meeting multiple analysts in the last couple of weeks itself, and that could be one of the reasons why people are drumming up some sentiment out here as well. Importantly, are they putting their money in that? Yes, perhaps, because delivery volumes yesterday was 82 lakh shares. This week the average daily delivery volumes were 54 lakh. And how does that compare with the last 3 months? It's just 14 odd lakh. So, as the stock is moving higher, a lot more people are marking a lot more stocks for delivery as well. And in terms of technicals as well, the stock has moved rather quickly, and as a result of which, at the lower level, the next leg of support comes in at 20-day moving average 128. It's about 2 to 3% away from its 52-week high, but moving with a fair amount of gusto.
All right, Mangalam, thanks very much. Absolutely, could be one of those turnaround candidates. So keep an eye on AB Capital. All right, five-star business finance, which recently listed. I mean, it's 7 days old in capital markets. It managed growth and margin improvement in second quarter on lower interest costs, but higher operating expenses and provisioning, which kept the profit in check. We have Lakshmipathy Deen Dayalan, a CMD at Five-Star Business, now joining us to run us through what things are looking like now. So good morning, great to have you with us here. Thanks very much. Prashant this side. Could you run us through some basic numbers? What was growth in disbursements like in the quarter? What did it do to your AUM overall? What is the average ticket size that you saw? Was that materially different from previous quarters? And of course, margins. Go on, sir.
Yeah. Good morning. Thank you for having me. Prashant, last quarter was a very good quarter for Five-Star. As you rightly said, the AUM has moved up 8% comparing to June to September. That's due to good disbursements what we have done in last quarter. We have added close to 41 branches in last quarter, which was the highest addition of branches ever in Five-Star. So close to 600 people have joined Five-Star in last quarter. And yes, the asset quality across all buckets have improved in last quarter. So I think overall, the positive momentum comparing to June to September, I think this is one of the best quarter that ever Five-Star has seen after COVID hit us.
Good morning, sir. The problem right now is the cost of borrowing could go up. So in that sort of a backdrop, how do you see your NIM shaping up from here on? They've been quite elevated as well. But, could you tell us, will you be able to pass that on, or the cost of borrowing could eat into that?
Yeah, I just wanted to give this clarity to everyone. Five-Star is, even comparing to last quarter to this quarter, the cost of borrowing has come down. You can see in our Q-on-Q performance. We were borrowing somewhere close to around 11.5% 2 years down the line. But today we are borrowing at 8.5%, 8.5 to 8.75%. Almost there is a drop of 250 bips, even in the current environment where RBI has raised their repo close to 190 bips. So very sweetly positioned because of our good capital adequacy, profitability and quality, we were able to attract big lenders, big borrowing from the marquee lenders, both in public and private sector banks at a very, very good cost. So we have not yet transformed brought down the borrowing cost to the customers because we were just waiting to see when the interest rate cycle is going to peak off. Once we get the signal that interest rate cycle is picked up, definitely we'll be transferring 100 to 150 bips to our customers so that the lending cost will drop down from 24% to close to 22.5 to 23. So that's the sweet spot where Five-Star is today positioned. We don't see any kind of contraction in NIMs and spreads.
But, sir, incrementally, that was a 2-year period, right? From 11.5 to about 8.75. You don't see any upward movement at all? Especially because given the fact that you do operate in the underserved tier 3 to tier 6 cities, right? Of course, I mean, the management of the business has been excellent and you've got a long track record. So I'm assuming you've got strong relationships with banks as well. But you're not seeing any upward movement? Because if one is to go by sort of what economists, etc., forecast, there's another 50 to 75 basis point increase in policy rate which will translate to bank lending rates as well. Yeah, go on.
Your point is right, Prashant. From an NBFC perspective, definitely the lending rates has to go up when the borrowing rates are going up. What I was saying is, even from comparing to last quarter to this quarter, our team was able to bring down the cost of borrowing to close to 0.75 to 0.5%. So because we were borrowing at a costlier fund earlier, because of a rating improvement and good quality and profitability and good capitalized, banks are able to underwrite the risk of 5-star and the risk premium is low. So that is why we are able to bring down our cost of fund. I don't see that even in next 2 to 3 quarters, even there is going to be an increase of 50 to 75 bips, as you mentioned. There is no need to transfer this cost of increase to the customer side because our cost of borrowing on the book is 10.5. We are borrowing at 8.75. Even there is an increase of 0.75, as you said, still our cost of funds at the book level will come down. So there is no need of transferring this increase in cost of funds to the borrowers.
Morning. The last time we chatted, you said your AUM is close to about 6,000 crore rupees, which is significantly higher than what it was. Could you tell us by the end of the year, FY23, what could that number look like?
As of September, we are at 5,730 crores. As I said, we have added close to 80 branches in last 6-9 months. So the disbursement is also healthy. We'll be close to 6,500 crores or a growth of 30% by this financial year end.
Okay, all right, good speaking to you, sir. Thanks so much for joining in and in fact clarifying those points. As you say, cost of borrowing, you don't expect it to go up too much in comparison to what you're doing. And you're confident that by the end of this year, the AUM will go to around 6,500 crores. Well, it's time for a 9:10 call, though. Sudarshan is back with us. Sudarshan, run us through that.
Well, the Nifty is a buy only on a sharp correction, intraday correction. And Godrej Consumer is a buy with a stop under 845.
All right. Mitesh, what about you?
I will choose a buy on Sun Pharma with a stop at 1,035 for targets of 1,080.
All right, gentlemen, thanks very much. Just 4 minutes to go for market opening. This flash at the bottom of the screen, which is telling you that that block deal which we were highlighting with regards to Zomato, that has happened. So 75.9 lakh shares have changed hands in a block deal window. And that is Zomato for you. We'll revisit that in a bit. But Sun Pharma and Gland Pharma will be in focus. Let's revisit those as well. Ekta is here with more. Ekta, hi, morning.
Hi, morning. Well, I'll start with Sun Pharma since that was one of the technical picks that you all alluded to as well. Macquarie has written on Sun Pharma. They've added Sun Pharma to their marquee buy list. They've reiterated an outperform with a revised target price of 1275 rupees. According to them, there is fast growth in the specialty revenue, which could unlock meaningful operation leverage. And according to them, the FY25 EBITDA could possibly reach 30%. They've modestly raised their above consensus FY25 estimated earnings to reflect the strong margin expansion. That's raised by only a meager 1%. Now, separately, Gland Pharma is going to be in focus because they've entered a put option agreement to acquire 100% of a French company, which is basically in the pharmaceutical injectable space, Cenexi Group, for $120 million. Euros. It could go up to 210 million euros based on addition of debt. Now, in terms of the acquisition itself, while it would probably increase their presence in the European market, the margins are low and that would probably be a concern. So it was 13% in CY21, 19% in the first half of CY22. And hence the street wants to see whether or not there will be sustainable margin improvement. Separately, we did speak to the management of Gland Pharma last evening. They said there is no communication from the parent company with regards to the Fosun stake sale.
Ekta, thank you very much for that. Let's address the Zomato news once again. We've already seen close to 76 crore shares change hands early in the morning via block deal. Nimesh is the one who first alluded to the likelihood of this block taking place. Nimesh, the details?
Well, it looks like there is a confirmation of the block happening in the morning. And the good part is it's happening in the block window. So the risk of slippage is going to be quite low, is what I understand. Anyway, the initial feedback was the demand was strong. And it shows up the fact that the whole deal is happening in the block window. The other interesting thing is now there is a lockup of 120 days for the seller, which is Alibaba. So they've sold 3% today by block deal. They're left with another 10%, but that cannot come for the next 4 months. So the supply overhang, at least in the near term, is out of the way as far as Alibaba is concerned. In fact, in the last 1 quarter, if you look at the data, some large investors have sold out. So Uber sold out its entire 7.8%. Other names like Sequoia Capital, Tiger Global, they all sold out. So large part of this, pre-IPO investor overhang seems to be out of the way. And today, in a block windows, Alibaba has sold its 3%. So I'll go with the green for the fact that there is going to be no slippage, and there is a further lockup of at least 4 months for Alibaba to sell the remaining stake.
Okay, all right, just in time. Thanks so much for that, Nimish. Zomato in pre-open down a little bit, but you could expect a bit of a bounce from those lows. Well, the bell is in, and in fact, we have the Nifty that's opened as flat as can be. The Nifty Bank, though, that's up by close to around 80 points odd. And a few of those banking names were doing pretty well. I think Kotak Mahindra Bank was higher, but that's sitting with a gain of close to around 0.5% odd. Hindalco maybe hopes that China will go easy and we'll get a reopen out there, so that's up close to around 0.8%. On the flip side, you have some of these tech-related names. Tech overnight didn't do very well in the United States, so you have Infosys that's down 0.5%. You have HCL Tech as well, that's a little bit lower. Keep an eye out on the Inox Group. Well, they're talking about reducing their debt, so maybe you pull up the intraday charts of Inox Wind, Inox Green, as well as Gujarat Fluoro. For the group on the whole, we were tracking those stocks as well. They have opened up in the green, so let's pull up the other couple of names as well. From the broader markets, IDFC, well, they got the SEBI nod to go ahead and sell that IDFC mutual fund to the Bandhan Financial Holdings. So the street is reading that positively. There's a bit of an arbitrage as well that's still available out there. So that opens with a gain of around 2%. BHEL, it's up close to around 1.5%. So good on that one. Interglobe Aviation, a bit of a rub-off, maybe a fiercer competitor coming into the aviation space and a more formidable one. So that's opened with a cut of close to around 1%. All in all, that initial flattish start, well, it's turned into a 50-point gain. And that was more or less on expected lines. So we're seeing that initial flat start getting bought into. Let's see whether or not we can get past yesterday's hump. 18,700, that should be a bit of resistance. Rima, what else?
Well, Zomato is open pretty well, right? Despite that large deal taking place in the morning, Zomato is up close to about 2.5%. As Nimesh highlighted, it took place in the block window, so the chances of slippage are low. And plus, there is that 120-day lock-in now for the Alibaba Group. So no more stake sale, at least for the next 4 months coming in from them. So Zomato has opened up with pretty good strength. Apart from that, IRFC continues to gain ground. This month, it's up close to about 60%. Today in the morning, in the first 2 minutes, it's up close to about 3%. So big move seen on that. Dhanalakshmi Bank also rallied towards the end of trade yesterday, and it's continued with the momentum. Bank of Maharashtra is another mover in the banking space. That's higher by close to about 1.5%. Tire stocks are taking a breather after the rally at the beginning of this week. JK Tyre SEAT down 1.5%. RVNL too. Just pausing for breath. Remember, RVNL has more than doubled since the beginning of the year, and all that rally has come through just in the last 2 months. RVNL today is also slightly subdued. A quick check on Lupin. Lupin is open flat. Ekta was highlighting the US FDA observations at the Mandideep facility. As of now, the stock is absolutely flat. And Gland Pharma, it opened up mildly in the green, but now it's slipped. So Gland Pharma is now currently down close to about 1.5%.
Well, it's a great open, Rima, right? I mean, the bounce has been strong, and we're up 50 points. So this is pretty good overall, looking at what the picture was in the morning. We've got advanced decline ratio, which is, 3:1 in favor of advances. Too early, although, to make any conclusions which way this will head. I mean, yesterday, for example, through the bulk of the day, the gap between gainers and losers kept closing, and by the end, it had flipped. More losers than gainers. Just a few other names. I mean, if you want to look at stuff with volumes at this stage, it's Zomato, as we highlighted already. IRFC, one of these railway stocks, which is up 3% or so. Reliance is starting just a touch higher. But again, I mean, this is a very, very flat kind of starts is what we have. On the downside, if I can just take a look at a few names, what do we have? Infosys is starting about 0.6% lower. RVNL saw some pullback yesterday, and I think that continues today. Gland Pharma is down 2.5%. Paytm starts about 0.6% lower. And you've got Jubilant Food, which is down about 1% or so. So it's a very quiet start. On the index, though, this is looking pretty solid with a 50-odd point up move. Again, I mean, just to take a look at where is this push coming through, on the Nifty. If I can just quickly look at this. ICICI Bank and the three banking names, ICICI Bank, HDFC and HDFC Bank, is where about 25 of this sort of 50, 60 point move is coming from. But, the fact is very little on the Nifty is down. Bulk of it is higher, 0.5%, 0.75%, 1%. So, there is kind of a broad sort of green out there on the screen at this point. Our market master of the day is Saurabh Mukherjee, a founder at Marcellus Investment Managers. Saurabh, great to have you with us here on the program. Thanks very much as always. Prashant this side. New highs, Saurabh, and looking ahead, when you get to new highs, you kind of call it uncharted waters now, right? So anything is possible in that sense. What is your sense from here? And this also kind of coincides with the end of the year. You're looking into 2023. What's your sense? How are things looking?
I wouldn't exactly call it uncharted waters, Prashant. I think this is fairly familiar territory for India. This feels a lot like where we were before COVID. The economy has normalized by and large. Credit offtake is building up towards mid-teens. In fact, it's going towards high teens. Foreign investor interest is back. You would have seen it in the last month or so. I can see it from the foreign investors going through Marcellus' offices. And whilst all of that is happening, China seems to continue shooting itself in the foot. So the combination of a domestic recovery, which is fairly broad-based, evident across lots of companies now, and the combination of China doing whatever it is doing on COVID means that foreign money and domestic recovery will carry on underpinning the stock market right through 2023.
Saurabh, morning. What's the investor feedback now that you get after the markets have hit record high levels? I remember a month back when you had come back from the US, you had met a lot of foreign investors and they were very gung-ho about India's potential in the manufacturing space. And they were citing examples of Apple. That is something you had quoted, on record. But in the last 1 month, there appears to be some signs of easing on China. So perhaps China is going to get back on track on the supply chain. Just tell us, what has been the feedback on what investors are saying in the last 1 month within this kind of a print on our markets at record high levels?
So I think that the further development in the last month has been, I think, an even further hardening in the American stance. By American, I mean both the American government stance on China and the American investors' stance on China. I think that the stance has hardened. It is pretty clear that America wants to freeze China out of the whole digital ecosystem, whether it is semiconductors, whether it is artificial intelligence. And as a result, over the past month, we've traveled a fair bit with foreign investors around India. They're very keen to see, or foreign investors are very keen to see just how much of the API industry, remember China's API industry is 9 times India's size, just how much of that can India grab? In fact, when I visit places like Baroda, Surat, Vapi with foreign investors, you can actually see Western pharma companies, Western chemical majors scouting for Indian partners, scouting for FDI spots, because it's just becoming increasingly unviable to source API from China, and it's also increasingly unviable to make API in Europe. Spain and Italy do make some API, but energy costs are 10x that of India. So I think that's the first area, foreign investors actually traveling around the country, both looking for investments to make and looking for Indian partners on the API piece. The second point on semiconductors, the mobile phone ecosystem, just iPhone itself, if India gets 25% of iPhone 14, that itself is a $40-50 billion industry. The broader smartphone industry is another $200 billion. That itself is attracting a lot of interest. That action is around Chennai and Hosur. So that's the second spot of foreign investor interest in terms of their traveling to actually see sites where, say, Foxconn has set up in India, or the Taiwanese company Visitron has set up in India. And the third piece is increasingly medical devices. This is a $650 billion industry. It's thrice the size of the smartphone industry, and very similar problems to actually what's happening in the iPhone factory in China. The West needs medical devices from China, but China can't supply them at any steady rate, and therefore that's the third area that investors are looking at. So plenty happening, lots of foreign investor traffic now into the country, both to set up factories, look for partners, and find investments through people like us.
Hi, Saurabh. Morning. Good to speak to you as always. Saurabh, on the third point, medical devices here in India from the listed space, do you all have some exposure?
Yeah. No, so we don't, and we are looking for investments. So if I sort of listed in order of ease of investing, the pharma API space is obvious, right? So we can do Divi's Lab, which we have in our large cap portfolio. In mid cap portfolio, we have GMM Fodler. In our small cap portfolio, we have Poshak, and we're looking for more investments. I think we will find more investments in that entire API and pharma intermediates chain. The second spot is the entire smartphone ecosystem. We are in fairly advanced stages of diligencing a company down in South India, which could have a play around smartphones. But I do have to confess that there aren't that many listed plays around this. Hopefully, there'll be some IPOs around the smartphone ecosystem. And thirdly, in medical devices, there isn't any large Indian company. We have a small invest in our Little Champs portfolio. We have Tarsans, which is the leading manufacturer of lab consumables. So these are things like pipettes, carboys. But we don't really have too many Indian companies like, say, Boston Scientific or an Abbott in medical devices, and I think that's an area where we'll have to do far more work. I don't think there's a large medical devices listed play in the country currently. But if you add up these three plays, you're comfortably looking at $300-400 billion of economic activity per annum over the next decade or so. So worth doing a lot of running around to find more investments here. Just a disclaimer, all of these investments, our clients are invested, I am invested, my parents are invested.
Tell us a little bit more about the company that you're doing due diligence, which could be a play on the smartphone market in South India. Not the name, but...
I think give us a little bit more time. I think, So look, I mean, so just to sort of step back and look at the big picture here, something like, say, take iPhone 14, it has 1,300 or 1,400 components going into it, right? Obviously, the highest end of the components, specifically the silicon, the semiconductor, is going to carry on coming from Taiwan. I don't think we're going to, in the near future, make the sort of very high-tech silicon which goes into iPhone 14. But where India can build a viable ecosystem is, say, the Gorilla Glass, which is on top of the smartphone, the optical lens which goes into it, the cover of the phone. Those sorts of things are being made in the country, and we're looking into a couple of companies who make those components. Our reckoning is this is looking like becoming the whole smartphone ecosystem looks likely to become as big as the auto industry a decade hence, and that's why finding well-run, clean companies who do a good job of making components for the smartphone ecosystem could be very lucrative for us.
All right, Saurabh, what about rural India? One spot of bother is urban India is doing well, but rural India is in a bit of a spot of bother. I think in the past you've been positive on stocks like V-Mart. What's your sense on rural India and a couple of these themes that you were looking to play?
So I think it's a fair point to make. I think anything around affluence, middle class consumption is obviously booming in our country. The formal job creation scene is hotter than I've ever seen it. And therefore anything which is class is doing well, anything which is mass is a little bit of a struggle. So let's take V-Mart specifically, right? Although revenues are up some 50-60%, that's because they acquired last year. There was a smart acquisition last year of Unlimited. I think they bought Unlimited, which was an apparel chain down in South India from the Arvind Group. So smart acquisition. But if you sort of look through that acquisition, sales per square feet for V-Mart would be 10% lower than what it was prior to COVID. And I think that just underscores the absolute hammering the poor have received over the last 3 years or so. And whilst V-Mart management is trying to address this issue of lower sales per square feet, they've cut prices of their products. Cotton prices have come off, thankfully, in the last couple of months, and hence V-Mart has cut the prices of its apparel. I think it's going to be a long, hard slog to recovery for anything which is a mass play. We're seeing similar dynamic in one of our other investments, Amritanjan, which is again in the Little Champs portfolio, right? Market-leading franchise in pain relief products and balms, and again sales are down 10-20%. So I think the mass play is a challenge. Hopefully a decent harvest through the winter. Hopefully some government spending going into the 2 years of the election season, the active election season, where the North Indian states and the country goes to polls. Hopefully that will give a little bit of an uplift. But I do have to confess, I haven't seen rural India this beaten up for a long time.
Absolutely. class versus mass. I mean, I think that's a good way to kind of put it and broad categorization. Saurabh, this is not exactly China plus one, but this is indigenization, which is defense. Have you given the sector a look, or I mean, and what keeps you away?
I mean, look, it's a big opportunity, clearly, right? We are importing every year $70 billion worth of kit. So if we could indigenize even half of that, that's a $30 billion sector. Nothing to sneeze at, significant sector. The challenge, Prashant, is finding companies which actually do a clean job, a competent job. So clean, it's a sector where you can understand anything which involves procurement from the government naturally gets messy. And the second challenge is working capital, right? You end up taking forever to get paid. So you make all this clever kit, but your return on capital is 10 or 11%. And that means people like us don't really get very excited. So there are clever suppliers of defense kit in the countries. Some are listed, but there very few companies are able to show you return on capital above 15%. And that's keeping us away from the sector. We'll carry on looking. We're carrying on doing video calls with some of these players in southern India, but I haven't yet met a defense supplier who can actually show me that they can actually make a decent ROC and thereby generate cash. And if you can't generate cash, it's no point coming to work.
Just one final question, Saurabh. Some of your funds are underperforming the broader markets, right, over the last couple of months, over the last 1 year. Your thoughts on that, and would you like to make some corrections to the strategy or changes? And why do you think? Give us the reason why you think it's underperforming.
I've been doing this for the... Yeah, so we've been doing this for the best part of 20 years. The core team has been working together now for 18 years. So we've seen these cycles repeatedly where you will have, say, in a 10-year cycle, you'll have a couple of years where public sector stocks will do well, metals and mining will do well, anything around power and infrastructure will do well. And we've had that rally over the last 12 months and specifically over the last 6 months or so. And that is but natural, right? If the Federal Reserve pushes up the risk-free rate of interest for the world, the Federal Reserve pushes it up by 3.5–4%. Investors like us who are investing in cash-generative companies, naturally, the valuation of those cash-generative companies comes off. If the discount rate goes up, the valuation of cash-generative companies comes off. And people like us have learned to take that in our stride. If we suddenly switch from doing what we are doing, which is buy clean, well-run cash machines, to buying public sector enterprises and metals and mining companies, that doesn't make sense because the public sector companies and the metals and mining companies, they don't really have a value-generating engine. They are plays on speculation. They plays on, say, for a metal company, they're a play on the LME metal price. It's not fundamental investing. It's a speculative play, and that's not our forte. So we carry on doing what we have done. I've seen these cycles. This is, I think, my third time of seeing a cycle where public sector and metal mining and power infrastructure becomes popular. And in such cycles, we tend to underperform. But having seen it so many times, we honestly don't lose that much sleep. We understand the underperformance. We obviously don't want to underperform. But then again, you can't really run a strategy and say 10 out of 10 years, I will outperform. The skill of an investor is in understanding where value lies. So for example, the fact that we doubled down on Dr. Lal through the summer will hold us in good stead. The fact that we are doubling down on Divi's Lab as we speak, courtesy the API point that we discussed 5 minutes ago, that will hold us in good stead. That, to my mind, is investing. You find great companies. As soon as they come off, you double down the position, and then in due course, the market rewards you.
All right, Saurabh, it's a pleasure. Thank you very much for joining us and running us through not just what you're doing, but I mean your investing philosophy as well. Thanks indeed. Saurabh Mukherjee of Marcellus with that perspective. 40 points now on the Nifty. We're at 18,660 at this point in time. Now, a Prestige Estate stock has been under pressure. It is down 16% from its 52-week high. But sales, demand, etc., are doing very, very well. Interest rates at the margin, though, are something one needs to be watchful of. We have Irfan Razak, CMD at Prestige Group, joining us to take some questions. Mr. Razak, good morning. Great to have you back on the show. Appreciate your time. Prashant this side. We had the DLF management 2 days back with us, and we were talking about this interest rates issue. And I asked, Mr. Tyagi of DLF, at what point of interest rates, home loan rates, does it start to hurt? It starts to keep away buyers, makes them rethink the decision to buy. Is it till about 8.5% things are okay. But once you start to creep higher to about closer to 9%, that starts to hurt a little bit. Would you agree with that? Because we are broadly right now in the 8.5% regime.
Morning, Prashant. Yes, interest rates going up is a concern because it's also a matter of affordability and how much a person buying a home can afford to borrow. And it's a function of how much EMI that needs to be paid month on month. Obviously, at the moment, we are at sort of a good level. And if it goes up more than 9, it's definitely going to hurt. But I don't think it will. I believe that after a point of time, it will also stabilize and it should also come down. So that's my prediction. However, having said that, people are committing to buy homes. I think that's a function of the amount of surplus people have and the jobs that are paying them, and people are committing themselves and they are buying homes. And again, having said that, there are different segments. Now, if you take the mid-income segment, that is where a lot of trading is happening. And having said that, there's also trading happening in the high end and the luxury segment. So you really can't pinpoint. It keeps changing, but the stable market would be the mid segment where we keep on getting the volumes as we go along.
Mr. Razak, morning. Did you participate in the Dharavi redevelopment bid? Adani won it. And what stopped you from being aggressive?
No, we did not, because we are still infant in the Mumbai market, and we don't want to go crashing in there. We are trading ourselves softly in Mumbai. Having said that, we are doing quite a lot of work in Mumbai, but we are doing things in a measured way, and we definitely don't want to get ourselves into something that is too much to handle.
Hi, Mr. Razak. Good morning. Well, you didn't bid for that one, but redevelopment as a theme, it's come back. After a while, I'm seeing so much of redevelopment, in the area that I live in, that's in Mumbai. What's your, sense on that space? Does it offer a lot of potential? And as a percentage of your business, will redevelopment have some part of, if you could give us a percentage out there?
Yes, see, Mumbai being Mumbai, where there's a shortage of land, the only way to get raw material, which is land, is redevelopment. And there are many societies which have become old-aged over a period of time. And this is the opportunity. There are many redevelopment proposals that keep coming to us on a daily basis. We have to evaluate it on a one-to-one basis. Actually, we are already doing a few of the redevelopments. And it's working, but it's a long process. It takes its own time. But if you do it properly and succeed, for me, it's all about delivery. Today, I've started the journey. Now, the question is, you have to get to the destination, that is, give delivery to the customers. Moments that delivery happens in a few projects, that means the confidence comes in, confidence amongst the investors, buyers, as well as in our internal team. And then there's no looking back.
Could you give us a sense of the hotel business? What are the kind of occupancies in Q2 and even now in the month of October as well as November? Has it picked up further?
Yes, hospitality and retail both have really kicked in, and hospitality is really doing well. It's actually exceeded the 2019 levels, pre-COVID levels, and there is a huge traction, and the occupancies have gone up big time. And we are running above 70-80% occupancies, which is really amazing. And we believe that this strong momentum will continue for some more time, unless there's some other blip. But as of today, the hospitality is rocking.
You all were exploring a REIT option, right? By when will you all be coming to the market with that?
REIT, whether it's a hospitality assets or retail or even office, we need to create scale.
Okay.
Now, already we have hived off a certain amount of assets to Blackstone in 2020-21. Now we are building a lot more assets. In fact, one of the first big asset that will be opening its doors to public tomorrow. That is, it's a 1 million square feet mall, which is a Prestige Falcon City Mall in Kanakpura Road in Bangalore. Now that opens its doors to public tomorrow. and that will be the first of the new inventory that comes in. And then the next one, maybe in about a quarter, will be the Kochi Mall. And then we are planning and executing another 5 or 6 retail products. And that once the scale comes in, whether it's retail or hospitality or even office, we definitely will look at various options, whether it's again going to be a REIT or it's going to be some investor that comes in, equity investment, because we have to balance our balance sheet well. We need to see that debt doesn't go up too high, and we need to balance it with the equity.
Mentioned
So
scale.
that endeavor is there all the time, every time.
Right, so you mentioned scale a couple of times. Do you have a number in mind in terms of total amount or in volume or value terms that at that point of time you look to unlock some value, either be a strategic investor or do a REIT?
Yeah, I mean, see, if we should have a few million square feet of either office or retail or X amount of rooms for the hotels, like I believe, again, we need to at least to have scale. At least I need a 10 million square feet of retail space or about 10 million square feet of office. And similarly for the hospitality, we are getting there. In the next 3 years, we'll have that much and much more than that. And we will be working. As of today, currently, the company is pouring concrete 70 million square feet across the country, both residential, office, retail, and hospitality. It's a humongous amount of work that is going on in different cities. And we are pretty confident and quite bullish on the real estate. And I believe that the best is yet to come.
What's the launch pipeline for the second half of the year? H1 was about 17 million square feet. Any similar number for H2?
Yes, I mean, we see for us now looking at our inventory in Bangalore, my inventory is the shelves are empty. We don't have much inventory at all. Similarly in Chennai, similarly in Hyderabad. Now it's a function of getting the approvals in place. It's all depends on how quickly the approvals come in, how quickly we get it registered and get the RERA number, and then we bring it to the market. So the teams are working strategically. And like you said, 17 million was in the first half. And we do hope to bring in 17 million plus in the second half. 1 quarter may be a little soft because the approval wouldn't have come or the RERA approval wouldn't have been in place. But then it gets made up by the following quarter. And we are on target to achieve the top line revenue that we started off in the beginning of the year.
Okay, fair enough. And no revision to that 12,000 crore number, right, for the full year?
As of now, we are looking at it, which is very sure. Okay. Anything over and above that, we'll be very happy.
Okay. And just one clarification that you said you should have at least 10 million square feet in any of these segments to kind of consider a REIT type structure. Is that a target you have, or is this generally a thumb rule when you consider these kind of structures, you should have some scale to put into a structure like that?
No, it's a target that we have internally. Okay. Nothing to do as a thumb rule or every different fund or investor has a different way of looking at things. Okay. We believe until and unless we don't have that, it's not worth really going for a REIT.
All right. Across segments, right, as you said?
Yes.
All right. Fair enough. Mr. Razak, thank you very much. Great speaking with you. It's a pleasure, as always, having you with us here on CNBC TV 18 on Bazaar. We'll take a very quick break here. Up next, another interesting conversation lined up with Mr. T.T. Jagannathan of TTK Prestige, who will join in to talk about how business is doing